stocks. Let's take stock of the handover then coming in from the Wall Street then.
Absolutely. Morning, Shreyanshi. Shreyanshi, one of the major fear that spooked the Indian market yesterday was how much Fed rate cuts are going to come this year. But then let's talk about the US market first. Of course, that is on the tap. This month is going to be very crucial in deciding what is Fed's next step going to be. But then what happened on Monday? It was a mixed bag of session. Nasdaq fell nearly 1/4 of the 0.4%. S&P rose marginally. Dow did rose nearly 0.9%. But then the major economic data which is on the tap is PPI, CPI data, which are slated both today and tomorrow. And these are the two crucial economic data points on which Fed's next step of action is very much dependent upon. Now we've seen that globally, the kind of fear which spooked the global markets, including the Indian market, was the bond yield inching higher. The bond yield again, it's inched nearly 4.77%. It is at a 14-month high, and now Fed funds, which is suggesting that the traders are suggesting maybe there's a near certainty that Fed will hold the interest rates steady, and this is what is spooking the Indian market. So overall, it was a mixed session which came in from US markets. Bond yield is, of course, at a 14-month high. But what about oil? Oil is also on a rise now. It's nearly $80.
Well, absolutely, and there's a lot of factors at play. But the first one that we really wanted to mark is the sanctions coming in from the US on Russian oil as well. So when you take a look at oil, the move that you're seeing right now is that oil prices extended gains for a third session at this point. So that's largely the kind of handover that we have. At least as far as oil is concerned, you do have Brent crude also rising above that $80 a barrel mark to its highest in more than 4 months. So that's the kind of move that you've seen come in. Now, the first factor to mark, of course, is the wider US sanction on Russian oil and also the expected effects on exports to top buyers, the likes of India and China. Firstly, let's take a look at the price levels. Then when you take a look at Brent crude, like I said, $81 a barrel is the level that you're looking at, and 1.7%, 1.8% in fact uptick is what you're seeing coming in for Brent as well. While when you take a look at US WTI, that's the one that was also up 3.5% there, about $79 a barrel is the level that you even have for US WTI. Now, do remember that Brent and WTI have climbed by about 6% since January 8th. They've largely surged after the US Treasury imposed wider sanctions on Russian oil, and the new sanctions also include a whole host of producers as well as 183 vessels that have shipped Russian oil, and this is largely targeting the revenue that Moscow has used to fund its war with Ukraine. So that's the number one factor. But other than that, also in terms of the expectations of tighter supplies, that is something that has underpinned the market largely for Brent and WTI. And when you take a look at the monthly spreads as well, you're looking at the widest backwardation since the third quarter of 2024. Now, backwardation largely is a market structure wherein you do have the prompt prices that are higher for those than those for future months at this point. That largely indicates tight supply, and it's nothing but a bullish pattern. So that is also something that you're seeing as far as oil is concerned.